This week on the Art of SBA Lending. I think it's a scam and we should get rid of it.
Man, I cannot wait to see all the comments on the title agency.
I would agree with you on that, and I think the price is insane on those things.
Right, we don't ever make a bad loan. They sometimes go bad, right? You know, she's transparent and they do all the digging because, again, you mentioned PPP too, Darren, and everyone can play Monday night quarterback now on PPP.
Monday morning quarterback. Even I know that one, Brooke, and I don't even watch sports. Lumos gets brought up on just about every episode these days because they are changing the way SBA loans are underwritten, especially small loans. So I wanted to take a second to explain the power of Lumos. So here's how it works. Lumos' scoring model, Prime Plus, leverages over 1 billion data points to come up with a predicted expected loss. So now you can quickly and efficiently decision each new loan request. Guys, we're talking about auto decisioning on small loans up to $500,000. They'll even sit down with you to build out a customized credit profile that matches the risk tolerance of your specific institution. Lumos is defining the next chapter of SBA lending, and it couldn't be coming at a better time with the rise of the small loan program. By the way, you can use Lumos to score your existing portfolio too, so that you can see where the weak spots are before there's a problem, and that way you know where to focus your resources. Let Lumos take your small business lending to the next level with cutting-edge analytics by going to lumosdata.com and scheduling your demo today. Hello and welcome back to the Art of SBA Lending. Today's topic, Doge. I was on X a few weeks ago, and of course I follow Elon Musk and all his crazy tweets. I think they're funny. I like this one here, and I'll heart that one over there. But then he tweeted that he just got access to the SBA systems. That didn't feel good. Nothing to see here, Elon, move along. But it gets worse. Then he left a comment on someone else's post that was talking about the Small Business Administration, and Elon said, should be called the Shady Business Administration. Only 8% of loans are paid back. Now let that sink in a moment. The richest man in the world, who's probably the most influential advisor to the President of the United States, just called us shady. Guys, it's time to suit up. We're going to war. Now, in today's world, X is the modern day town square, along with the Art of SBA lending, of course. And so people were starting to talk about the SBA. Now, I was out there defending the 7A program, but let's just say I was outnumbered. Not with facts and figures, but this whole Doge movement. And they didn't want my pesky facts to get in the way. One guy said, we are stealing money from taxpayers to loan it to unqualified businesses that can't qualify for regular loans. I broke down the whole zero subsidy model to him in a well thought out post, and his response, not according to Doge, you've been exposed. Another guy was complaining that the SBA's budget was $58 billion, conflating the cost to operate the program with the amount of subsidy appropriations for the actual lending. And, you know, I could go on, but those were some of the more thoughtful critiques. It only gets worse from there. But then a few days went by and Elon blew up some other 3-letter agency. So maybe we were spared? Well, good. We should be spared. And by the way, I'm a fan of Elon Musk. I've owned a Tesla for almost 5 years. I've read his 1,000-page biography. I even bought those little red shorts that he was selling to make fun of everyone who is shorting this Tesla stock. I have it all. But if I have to pick between Elon and the SBA, I'm going with the SBA. Now, that doesn't mean the SBA is the most efficient agency in the world. Let's not forget the E in Doge stands for efficiency. And there, we have a ways to go. Now, during my Twitter wars, I was trying to look up some of the numbers, and correct me if I'm wrong down in the comments, but the actual operating budget for the SBA appears to be just under $1 billion. Now, I wouldn't mind taking a look at some of that. The SBA does a lot of different things, and I really only know about the 7A and maybe a little bit on the 504, but if we're sending $100 million to some far right or far left group to promote some weird stuff, I want to know about it. Now, if you look at the 7A folks, you're going to see that they probably need more resources to support a program that's actually working so that we can keep it working. Right now, we have 21 non-bank lenders that are being I'll be nice, underregulated. Guys, come on. We have all been doing this so long that we're used to it. But when an outsider like Elon comes in, he's going to push people past what they think is possible. He's done that in every one of his companies. Why can't we close a loan in SBA in 30 days? Actually, that's already been done. Why not 14 days? Why does it take a month to get an appraisal? Why not a day? Why do we even have appraisers anymore? Isn't there an AI for that? Look, all I'm saying is I want to keep the stuff that's working and improve upon it. This is a once-in-a-generation shakeup in our government. If the SBA 7A and 504 programs are truly value add to small businesses and the economy and to taxpayers, then I'm confident that they will be safe. And if they aren't, well, repeat after me. Would you like fries with that? All right, joining me today to break it all down, we have a panel of Art of SBA contributors, Darren Davis, President of Government Guaranteed Lending at Colony Bank, Javier Jorge, EVP, Director of Government Guaranteed Lending at Locality Bank. Did I get it right? And Brooke Mirenda, President and CEO of Sedco. All right, thank you guys for joining me today. Let's jump into it. So, what's everyone's take on this whole Doge thing? Brooke, why don't you kick us off?
Well, I think, it started, a few weeks ago when we were told, there might not be lending and everything was stopping and everyone had to submit their budgets to OMB. And that's, I think, when we were all like, what does this affect us? So obviously we are going to NADCO, our trade organization, to figure out, are we going to be able to lend, right now? And I understand conceptually why, but I think for us, that's when it kind of started. Like, it's not that that's for real, but it was like, this is, they're really kind of digging into these programs, which I don't think is a bad idea. And we'll, I'm sure, dive into all that. But to me, that was when it actually started, was when we were all trying to figure out if we start submitting deals the next day after, because it was like that day and it was done at 5. So if we start submitting deals,
right. I remember that. Everyone was freaking out. So it just created a cloud of uncertainty.
Correct. Which that's not good, especially for, borrowers. They're in contracts, they're trying to close. Then you think, what if you're trying to fund? You've got banks with a 504 holding sometimes 90% of that loan. Oh, we can't now fund this loan. So it was, there was that was our biggest concern, not just approvals, but really on the funding side. When we already have an approval that we need to fund a loan, is there going to be a problem doing so?
Couldn't agree more. I think we saw it on the 7A as well. Funny enough, statistically, there were a lot of authorizations pulled on that day before that 5 o'clock number, well above the average. And I think that was consistent with the the uncertainty of the conditions that we're now in, right? I think to your intro, Ray, I'm super fan about, I drive a Tesla. I'm all in as far as efficiency for the E and Doge. My concern, I think, is what we're really tackling here is what the impact is to the small business community, and more specifically, this access to capital conversation. Now we're in it, right? It started a couple of weeks ago. It's getting even more headlines. I think there was an EO signed earlier this week, right? 2 days ago, I believe, that overnight we had 100 plus dismissals of SBA personnel in county. And we know, I think we all acknowledge that the SBA has a lot of things going on. To your point, Ray, lending is a piece of it, right? The 8A program, the database for government contracting, the certification process, the outreach with SCORE. There's a lot out there. And I think I say this at least once a day to my entire team. You know what the biggest room in the world is, Ray?
What is? I know this one. Go ahead.
The room for improvement, baby. So at the end of the day, I think we have a lot that we can grow on, but the combination of the uncertainty internally with the misinformation that is leading maybe for ill-informed decision-making is a bad combination, in my opinion.
But are you still a fan of Elon after that shady comment?
I'm going to double down and say Hanlon's razor, right? Do that attribute malice that could be easily attributed to ignorance. And I think maybe Elon, I would have to guess he probably doesn't meet the credit elsewhere standards. So he never has an SBA at all. And frankly, I think he's actually wasn't a citizen for most of the time, so he wouldn't qualify. So I'm just going to chalk it up as, Elon didn't get an SBA loan for any of his companies. But that doesn't mean that if he learned about the subject and understood the facts of the situation, the fact that we've been 10 years of zero subsidy, the fact that, half of the economy is supported by small businesses, and that this gap isn't filled by anyone else in the marketplace. The other option, right? If we really want to get real here, if they don't have SBA, where are we going to go, guys? Where are they going to go? They're going to go to that 1.4 plus trillion dollar private small business lending space that is way more expensive and causes damage in the long run health of the community, in my opinion.
Yeah, well, I was going to say, I lucked out. I was sick that Tuesday, so I didn't have to deal with it. Great day to get sick. But you know what? After hearing about it, it kind of reminded me of the disruption during PPP, right? Of all the craziness there. So I think that's something we should start expecting here, just disruption across the board everywhere. I mean, that's what Elon did with Twitter, right? He broke it and then he tried to fix it. And so we're going to go through a phase of being broken for a while until it's fixed. I would also add, I know this is controversial, but I mean, have you all looked at Project 2025 and SBA? It actually supports the SBA. So it really changes the focus from, international trade to manufacturing. So I think there should be some opportunities there for us.
Yeah, don't they want to increase the loan to 100 million or something?
It's 50 million for manufacturing, yeah, which would be crazy. And they also want to start another program for middle market companies too, as well, outside the.
Well, I think I just became a right-wing conservative, or I guess it's a step beyond that. But anyway, yeah, that's probably for our Patreon. But where's he getting these numbers from, Darren? Because it's 8% of loans paid back. I don't even know how you can come up with that.
Well, you can come up with that
I have a guess.
The grants.
PPP statistics.
Yeah, PPP, grants, putting all that together, disaster loans. The 7A is probably a really small portion of that, right? When you add up all the funds.
A drop in the bucket, right?
Yeah.
We put out more money in 2 years under the PPP program than we did over the life of the SBA. We're talking about massive, what was it, $1.2 trillion? And we're at, a $50 billion annual clip normally? There's a lot of zeros going on there. And that's back to the misinformation perspective, right? I mean, if you call a PPP a loan, that is not true. It was a forgivable grant, right? That could turn into a loan if you didn't qualify for the forgiveness. But that wasn't the intent of that program, right? The program was supposed to be a grant for everyone that qualified. Unfortunately, we understand that there was a significant amount of fraud involved in that program. But once again, it wasn't a loan. It was fill out a couple pieces of paper, provide a couple other documents, and you get money. And
yeah.
We just happened to be the intermediary and the rails that facilitated that process. And, I think one of the happiest moments, the proudest moments of being in this industry was our participation in those types of programs to help the small businesses. But I'm also real enough to understand that, there was a money grab too, and there was a lot that happened that frankly was a waste of taxpayer dollars. Does that mean that you throw the baby out with the bathwater, right?
Exactly.
SBA, at its core function, what we do day in and day out, serves a massive benefit to our communities, period, point blank. And it used to be bipartisan approval. I don't care what side of the aisle, pro small business, no one got in the way.
But most of the fraud, though, if percentage-wise, was idle. It wasn't PPP, because PPP was done with lenders who are doing more due diligence. So when you look at the fraud, that's where they're really coming down on SBA. While we're all lenders on behalf of the SBA, it was the SBA direct lending is where a lot of the fraud was. And those were a lot bigger loans, but then PPP.
Oh, that's a good point. I had not heard anyone make that point. That's interesting. I mean, I've been making the argument too that if you've been a fan of the show for a while, then one of my favorite companies to work with is Rapid Business Plans. Last year alone, their business plans helped facilitate over $600 million in government guaranteed lending. They're on track to beat that this year. More and more small business lenders and their borrowers are relying on Rapid to help with the business plan, projections, and assumptions because their team goes the extra mile to ensure everything is done fast and done right. And that helps streamline the process. They're great at export business plans, by the way, which are critically important at protecting that 90% guarantee. Rapid also offers feasibility studies, which tells you if the project is, well, feasible. I would recommend these for any large startup loan because it protects you and it protects the borrower and helps you get more good deals done. Go to rapidbusinessplans.com to set up your Get Acquainted call today. Find out why so many top producing BDOs recommend Rapid to their small business borrowers. We're going to leave a link in the show notes just for our Art of SBA listeners. Now let's get back to the show. Even if this was a subsidized program, it would still make sense for the government, I feel like. Now, we've had to operate in this zero subsidy model for a while now. And that's like the expectation that's kind of been set. And we're trying to maintain that, but meanwhile, look at all this other money we're finding that's been going all these other places. And we got to kind of come to Congress every year and defend our position. It's kind of ridiculous. But the stat of 99.5% of loans getting paid back, which is the actual stat for the 7A program over the last decade, that seems almost like too much. Like, is that what we should be shooting for? I feel like we've had 0% interest rates for so long. Then all this liquidity came into the market, and, we had, for the most part, on the last 10 years, a really clean track record. But do you think it was like artificially low? Like or is that like a normal?
Absolutely. I mean, that's what concerns me right now. Because if you look at the 10-year history, right, we're abnormally low, extremely low. And I always believe in even Stevens. We're going to catch up, and unfortunately, it's probably going to catch up pretty quickly with what we're seeing. Obviously, there's the portfolio stress right now, and the combination of that, along with all the fee waivers that happened or are still going on, really, is really damaging the program right now. And if they pick a set in time, it can look really bad right now. It could. And that's something we should be concerned about. Well,
and that's what Lumos was saying on the webinar we did with them the other day, because like they were saying they said the default rate for 7A for fiscal year 2024 was 3.69, and he said that he's projecting that it goes down next year because a lot of the defaults, I'm talking about Brett, a lot of the defaults were those kind of catch-up defaults from the previous couple of years.
Well, and defaults, I'm sure, different than charge-off, right? I mean, you know what I'm saying? So what's the real charge-off rate? You look at default, sure, it might be a default, but what's the charge-off rate? That's the loss.
Exactly. What a great point, Brooke, right? At the end of the day, that might be the loss today, but that collection is still happening across multiple years. And I think there's a high success rate, especially, and this is an interesting fact I heard, on smaller balance loans, right? So the smaller the balance, although we have higher default rates on those types of loans, over the life of collection periods, you do receive a lot of that money back for the taxpayer's benefit. I would say let's take your question, Ray, and say, are we doing enough? With the amount that's being provided, what else are businesses doing, right? Because the need of capital is going to exist whether we're given it or not, right? And the market is going to provide solutions. And what we see are the ballooning of small business private lenders that are scaling quite a bit. I think the statistics are that there was $1.4 trillion in fiscal year 24, and it's looking to go up to 1.6 trillion in lending in that space. If you look at all bank lending in the C&I space, that's 660 billion. So there are 3 times more demand in that space for small business capital. That being said, the question is, do we want to participate there? How do we fill that gap? Back to the core mission of Doge, right? Efficiency, technology, perhaps, to help grow. I mean, if you really want to go out there, there's some cool stuff. Did you hear about GSAI? Government Services AI. The item, he's trying to build an AI where they feed in all the contracting languages, and that points, he being Musk, that points direction on where they need to go and cut and reduce spending. That kind of philosophy could work, right? I mean,
I heard about the cave underground that with all the retirement paperwork.
Yeah, I heard that one too.
In the grand scheme of business lending, SBA is a smaller part of that, and I guess we have to defend the program in this moment in time. And it's like a twofold argument. Is it needed? Is it actual, corporate welfare? And then also on this end, it's like, well, it's not even costing anything, in terms of this zero subsidy model. So zero subsidy model aside, because, if there is a subsidy, that argument goes out the window. Although they probably would just raise fees and stuff, but is the program needed? And let's just stick with the 7A for now. What would happen if it went away? Like, would they just go into these other markets of CNI and, other forms of lending? And yeah, it would cost more money, but isn't that just the free market?
I think if you have less capital, you'd have, less transactions going on then too as well. There'd be more owner financing probably going down that route. So there'd be less liquidity in the market for those owners that are selling to reinvest somewhere else. I just think that there's not really an alternative to certain types of financing. Obviously, the real estate, there's probably opportunities there. But for business acquisitions, startups, those types of things, there's very limited availability out there for this space that we're in. So,
well, let's look at what the banks would do. I don't know any community banks that do SBA that would do conventional lending with the same credit requirements, right? So that's all off the table. Okay. And so what else does that do? Well, then you have an SBA is a standardization of what a small business lending process is, right? If everyone is going free market because the banks are out of it, then accessing capital will even be more complicated for the business owner because there's not a standard anymore, right? There are a lot of compounding enhancements that come with this organization, right? The zero subsidy program is basically an insurance policy, and we land within our loss of default and probability of default, which is the subsidies, the guarantee fees and the servicing fees that we pay in order to sustain the program. If the costs go up and we still want to maintain zero subsidy, we would increase the cost of the capital. But that cost is in tiny comparison compared to what the free market charges are for the same type and amount of capital.
Well, why are there any areas within the 7A program that you think are being abused or just not kind of giving us enough bang for our buck in terms of the federal government and the taxpayer? Because if there are, that's the stuff that is valid. And, I don't want to just blindly defend everything because I make a living off of it. I would like to know, is there anything where we can tighten up? Because I'd rather find it first.
Well, I think one other thing we should look at too, while it's a zero subsidy, there's still a cost around the program. So there's cost for personnel and all that. Mm-hmm. And obviously that's where we should have some concern too, because they don't have enough people right now.
Right.
Unfortunately, we do have loans that go bad. We have been sitting up there at the Guaranteed Purchase Center for months, and they're just telling us we'll get to it when we get to it, right? So that's the concern I have is all right, I know they want to streamline everything, but if we get rid of the people, sometimes we have to go GP on deals because we have to, right? We need advice on liquidation to run liquidation expenses and so forth. We need approval for that. So if the people aren't there, it's going to slow us down the ability to collect on a timely manner too when things go bad. If we look back to what Trump tried to do in his first administration, they tried to do a negative subsidy to have us pay for the employees, right? So if that thought process come in here now, how are they going to cover that expense? That's something we need to consider too.
Brooke, do you foresee any shakeup in the 504 world? Because doesn't that program not cost anything either? What's the deal there?
Yeah, zero subsidy too, and our default rate is 0.06. Something crazy good. But keep in mind it's you're purchasing a fixed asset, a very different program where a lot of our deals are alongside an FDIC OCC bank. So it's a different animal. Where I think where CDCs are concerned a little bit they're the CA, the Community Advantage lenders, because we're a CA lender. We funded $1 million in the first quarter, Sedco did. And so, and these are the small dollar loans that unfortunately, maybe I shouldn't say this, but a lot of 7A lenders don't want to do them. Or if they're doing them, it's a machine, it's credit scored and, whatever, where, the companies like Sedco, CDFI, CDCs that are doing the community advantage. We do management technical assistance. They had a bankruptcy 7 years ago. You find out that it was a medical bankruptcy, and it wasn't because they cashed out a bunch of credit cards. It's a different story. And so the reality of it is they're really focused on the CA because I guess a year or two ago, it was like tied to DEI. So do you know the answer? Like, is a woman-owned business part of an eligibility factor of community advantage? Do you guys know?
Not directly, but I do, especially with the Supreme Court cases in affirmative action, that is a conversation that's happening in CDFI space, Brooke, about.
Well, I'm asking that rhetorically. It's not. Neither is. I'm saying.
I thought she was asking us.
My point is it's not women. It's not minority. It's underserved, and sometimes underserved goes in with that DEI. Well, underserved are startups. Underserved could be the 50-year-old white male getting a loan for a startup, and so. Opportunity zones. Tim Scott's a big opportunity zone guy. So when you look at that Republican side, that's where community advantage, CA lenders, and whether CDFIs or CDCs are really filling that gap, because we've had calls that we've heard they're trying to cut CA, and we're like, wait, hold up. We're providing something entirely different because of that management technical assistance. And banks aren't doing startup loans for $150. Come on, let's, but we have, most of us are nonprofits. We don't have access to Fed funds. We're not a bank. You know what I mean? We're using our own capital to fund these. So we're a little more conservative. That's just, we sell the secondary market only for the capital play. I just need to make sure I have enough capital. Outside of that, I'd make a heck of a lot more money if I kept the interest on the CA loans. My income would be way better, but I want that capital back to then re-lend. When I'm lending out $1 million, I need that. I'm selling off in the secondary market, and these are smaller deals that we're talking to every quarter. I can't tell you how many. I think we have three that have come back to us for another 100,000 CA. So that's kind of what we're dealing with, and so it's different. But I think when the SBLCs came in, that kind of made everyone panic a little bit. And we're now a CA SBLC. So now companies like Sedco are coupled with them, which we should not be. To me, we should be totally carved out, because we're not, just that SBLC like a machine. It's not like that.
Right.
So I think,
you're actually, in the community and doing these small deals. And I could, so for something like that, it's okay, that's at the top of the pyramid of what we want to do to kind of foster economic development in our communities, small loan startups, that's new jobs. That is so much more valuable, in my opinion, than a $7 million hotel or a self-storage facility for $11 million that's going to have one job. In fact, maybe we should look at that, Elon. But sorry, self-storage guys. It's okay. They don't cash flow anyway in the 7A space. All right. So, but I don't know if it's a concern, but if you're going true federalist on this, the federal government is there for such a limited reason, so many, right? It's does the federal government really need to get involved in local economic development? That's if you really boil it down and carve it down to what the federalist sort of mindset is of the federal government, because obviously that's kind of where they're just blowing stuff up left and right and just saying, send it back to the states, send it back to the states. Couldn't you make that argument as well? And wouldn't that be the biggest concern, is that, yeah, this all makes sense, but we just don't want to deal with it because we're the federal government?
Well, then we talk about how far is the line, right? Because then if that's the case, then why do we have federally funded FDIC insurance, Federal Reserve over traditional banking? Are we going to give corporate America at the big end the subsidies from that perspective and nothing on the bottom end for small business? If you want to go libertarian to the extreme there, laissez-faire, everyone for themselves, that's fine. But
it's a difference between regulation and this is a bonus. This is we're gonna try to spur things versus an FDIC situation, which is
well, that's a bonus too, Ray. You're artificially reducing the cost of capital by increasing the leverage of what lenders can lend out.
But there's a risk component to it too with the whole banking.
If you had no bank regulators, we'd go back to the robber baron days where there would be bank crises every other year, right? But to the core there, that increases cost of capital, that increases uncertainty. So the argument, it's a fantasy, Ayn Rand, right? We think all complete libertarian, every free market. But in practice, we're irrational players, and we're going to have bad actors. And unfortunately, when you have high risk, high reward structures, someone's going to take that risk, and unfortunately could drag everyone else down, right? So that was the idea of a little more stability across the board. The argument for SBA, in my opinion, I think you summed it up earlier. Great. You too, Brooke, and your mission that you're doing. You can't have big business unless you have small business. And if you look at some of the people who received SBA loans in their past, I don't know about you, but I like my Nikes. I like, a Ben and Jerry's. And guess what? They had SBA loans. So no one would lend them money except for an SBA lender. And if it didn't happen, we may not have those. And those are just a couple examples of many, many, many companies that are now the examples in our country as well as, globally, right? And at the end of the day, we as country, we get to figure out what we want to invest in. And if we want to invest in small businesses, I think that's a good investment, period, point blank.
That's what I was going to say. It's an investment play too. Think about the investors buying these loans. They're also, that's what happens with 504. They get pulled together and sold in the secondary market. And you're talking about rates in the 6% for 25 years. It's a pretty good deal for a business owner. So I understand what you're saying though, Ray. It's an interesting point, but when do you pull out? Like, we've got loans on the books for 20. What happens? Like, you know what I mean? Call all the notes and expect people to, how does that work? How do you even unwind it?
Well, Darren, what would happen if tomorrow they just signed an EO that got rid of the SBA?
It's illegal.
I think your answer earlier would be all flipping fries or making fries, right? So I don't think that's a reality at this point in time. I mean, I think we have a strong trade organization. You got support from both sides of the aisle. I think really the key going into this is more about the cooperation between the new administration and the oversight of the committees on both sides. So, and I think we're going to have that there. I think the risk of losing the program, like I said, look at Project 2025. And they support it. It's just getting rid of waste. And I think the biggest concern, I think, is just misinformation getting out there, and things that are actually working get removed, right?
The SBA was formed on the SBA, Small Business Act of 1953. So
signed into law by a Democrat.
Yeah, and which was established by Congress, right? And means that no president you can unilaterally remove. So legally speaking, SBA will be here. The question I think we really are concerned about is, what will it look like?
Yeah.
Darren, you brought up a really good point though, because I think you're exactly right. If you recall, the last couple not interviews, when Isabella Guzman was meeting with members of Congress, both sides were just all over her because it wasn't transparent. So the biggest thing I think for us as leaders is to be transparent. Here's our default rate. Here are the loans gone. When we don't ever make a bad loan. They sometimes go bad, right? You're given loan. If you give 100 million out to startups and 4 million go bad, it's a pretty good deal. That 96. What's the other part of that? 96 million. We're good, and startup, and now I've created this job. Create jobs through this loan program. So again, you bring up a good point, because I think assuming Kelly will be, she's the SBA, but she's transparent and they do all the digging, because again, you mentioned PPP too, Darren, and everyone can play Monday night quarterback now on PPP.
Monday morning quarterback. Even I know that one, Brooke, and I don't even watch sports.
Is that what it is? Is that the same?
Monday morning.
But everyone can point the finger at, get the money out tomorrow. Get the money out tomorrow. So the pressure. So while I know you want to, pounce on Trump started PPP and Biden continued it, they keep talking about fraud with PPP. Well, the fraud was really with EIDL, and that's direct government lend. That's a different deal than lenders. So these are the things that I think, as we talk about misinformation, and as long as we as leaders get this information to the administrator, we have the contacts to be able to say, this is the real deal. We're on the ground, and I've been poached a little bit because you guys I'm a Republican, I'm conservative, I do the CA loan program. Do you know what I mean? This isn't free government money. And so, understanding this is how, this is how these programs work and how and why they are successful. I'm with you, Darren. I don't think it's going to happen, but it'll be interesting to see what it looks like going forward. And if they provide any more autonomy for established lenders. We've been around 40 some years. Do you know what I'm saying? Like, we go through audits, meaning you talked about liquidation. I mean, we had, like, SBA didn't even know what to do. We're trying to send them money and they're like, we don't know what's going on. I'm just like, oh my gosh. So, if we just knew, hey, here's what we do as lenders, we know if we learn the process of liquidation or whatever, we can actually probably take it in-house if we had to. So I can see those types of changes being made. And I can also see, like, the character determination, I don't have a fork in here, but if I did, unless you're, like, presently behind bars, you can get a loan. Like, I can see, like, I know if I had a fork, it'd be perfect.
It's so funny you say that, because I was watching Kardashians last night in bed, and that policy change came up. They were on the show celebrating it. Like, Kim had just left the White House, and she's like, guess what? All these guys are going to be able to get SBA loans now. And I was like, not so fast.
If a lender's willing to do it, right? And that's what I'm saying. So it's like they went from 0 to 180 overnight, right. And for us lenders, we're like, well, we're talking about the guy at 22 that got DUI and he's 40 now and he's not had anything. Does he have to go get fingerprints? But again, that's why I think they're going to pull back a little bit. Some of those regulations that didn't quite make sense.
I think the bigger question in the short term is, like, how are people going to handle the disruption? Are they going to continue doing SBA loans? Are they going to pull out for a little while till things settle down? Because there is going to be disruption. I mean, I think we can all agree on that. So, I think that's the.
Do you think there's going to be some reversals of some recent policy changes, like the SOP and stuff like that? I mean, Nagel's been pushing for a lot of it, right? Yeah. And a lot of it was pretty aggressive. And these guys are more conservative, right?
It's already been talked about. I mean, if you looked at the House Small Business Committee and the Senate Small Business, they already had bills they were talking about to pull back some of this stuff. So I think it's going to happen.
Okay, well, that's going to really shake things up in our world then. That'll be an episode.
Do you think they'll do anything with the affiliation? Right? You think they'll go back to with the affiliation?
Ooh, I'll trade affiliation for an increased loan amount.
I think they need.
It's the same thing, isn't it? At the end of the day, you're just removing the $5 million cap. I'm on the 7A side, the $5 million cap per industry code versus having a larger balance. No?
Well, I think, honestly, the affiliation thing is like, all right, so yeah, you can get unlimited SBA loans if you have businesses in you can have 100 businesses in 100 sectors and have, $500 million worth of SBA loans. Who actually can pull that off? Like, the banks still have to lend to those people.
Right.
Someone has to approve that loan.
Yeah. Now, people are trying. Don't get me wrong. I see it. Hey, closed a $5 million last month. I'm ready for my next one. And I'm like, dude, how'd you even get the first one? And that loan amount, I got to get that loan amount up. $5 million is just not what it just doesn't buy you what it used to.
And darn inflation, man.
I mean, that's a common sense move, though.
What's the number you guys are going for? Is it 10 or 7? What are you doing?
I mean, the last proposal was 7.5.
7.5. Right? That's why I thought it was something like that. Okay.
So I'm in the 7.5, 8 range. I mean, I would not be happier with anything lower than 7.5.
For any use, like a $7.5 million working capital loan, you're good with?
Yeah, because what if it's a $200 million company?
Then the size standard still applies.
Alternative.
You have to change that.
What are you trying to out SOP me here on my own podcast?
No, I'm just. To
answer my own question, if the SBA programs went away, first thing I would do is take a real vacation. That's first. I say we all go to Hawaii. No, but if that did happen, do you think there could be a private version of this?
Like a small business insurance group where we all agree that we put.
Javier's like, yeah, I already wrote the business plan.
Yeah, I mean, it's like an insurance co-op. It's basically what you're explaining.
Yeah.
The QSOs do it on the credit union side, right?
That's right.
It's doable, but the problem with a large network is you kind of need everyone to be on there to make it valuable, right? So it's a hard chicken or the egg problem. because you get the cheaper cost at scale. And that's how insurance works. And then you need everyone to police each other. And the only big policeman that really has enough of a bite is the government, is what we've learned over time. So I don't think we're going to be able to get it as low as it is right now. But could there be a private version? Of course there can. Don't ever underestimate the ingenuity of the American entrepreneur.
I agree, but the cost to borrow probably much higher because you don't have the full faith and credit of the government when you sell the loans, right? If you're going to have a secondary market, I think it's definitely a possibility. I don't think it'd look anything like what the SBA program is today.
Does anyone think it would? Because is this still a true credit elsewhere product? Do you think? Because didn't it you used to have to give like 3 decline letters?
Well,
I argue that 504 is not credit elsewhere because it's not. It's we're a job creation program because 7A you can create 1 job or 0, but at 504 we are measured on job creation by every dollar we give out. So to me we're an economic development program. We're not, even though we need a credit elsewhere. To me, we're not a credit elsewhere program. We are a job creation program.
I would love to really take a look at just everything, and kind of like they did with the 2023 changes. It's like those were sweeping changes. It was just like, well, where are these coming from? Like, but like there's other things that I would be like, we could probably get more efficient, I'm sure if they just came to us and said, hey, how could we make this thing more efficient? I'm sure we can.
Why don't we get a little more meta about it? Instead of going like, let's all figure out what we all should be doing. Why don't we set up like a system where we can try out ideas, measure the outcomes, and see which outcomes are the ones we all want. And then we align on those processes, procedures, or best practices, right? I know that's like one step back and too ambiguous, but ultimately it could be something that we can iteratively learn over time. What works, what doesn't work, right? Because the reality is with small business, the reason why it's so difficult, in my opinion, is because it's so complex. Because just because we say it's a small business, the industry, the location, the macroeconomics, the experience of the owners, it is so diverse and so the possibilities are endless. And we need the ability to adapt and maximize, not put everyone in one box, but help everyone out in where they are and hopefully learn over the process, right? That's why we need a lot of lenders, right? Because then we can each focus on where we feel best in, whether that be geographically or industry specific or product type. That specialization allows us to reduce our risk profile.
Well, and the stats matter. I remember we were asking, I don't know if we ever got it, but at NADCO, we were asking, for our program, if it's a special use building, it's an extra 5% equity. We're like, okay, well, what's the default charge-off rate of special use buildings? Like, does it matter? You know what I'm saying? Like, does that 5%, are we seeing where that matters? And you hear, because it's like, do things that make sense. Exactly. It's a special use building. We're not, they're not taking it back. They're paying it, whatever. So it's kind of like, do the stats matter with what, again, like you said, take a good hard look and go, okay, this is the loans that were done special use and 0 charge off, 0 default. Like, why do we have to have a more equity injection in something like that?
Well, maybe they're performing like that because of the additional equity injection.
The less liquidity. Yeah.
I disagree. Cash flow.
I'm a big fan of
we're not collateral lenders, we're cash flow lenders.
Right. If you really look at cost of capital, the cost of actually providing the loans and collecting all that is incurred in that cost as well. So if we get better at doing this, like, I'll go for it, Elon. That means we can even lower the cost to the borrowers and lower the cost of borrowing in general. And that's a hell of a way to reduce inflation, right?
I was going to say, just taking Javier, your whole comment. I mean, if you look at the program, it wasn't built for an entrepreneur, right? I mean, this is such a difficult program for a small business owner to get through. And I've always said, small business owners are successful because they do it their way. That's why they're successful, right? But in SBA, you got to drop everything and do it the SBA way, or you don't get it done. So somehow they got to figure out a way to kind of match those two together to make it easier. Because it's not just us. I mean, having a borrower has to go through a 3-page, how many items closing checklist after they've already had to supply us a bookload of information, is difficult. So I think we got to get that end user more involved in this process and feedback than we do right now.
Yeah, I feel like I always describe an SBA loan as basically just take a mortgage, because everyone's gotten a mortgage, and just multiply it by 3. But even a mortgage is painful for me. I mean, to buy a house. I don't think it's ever going to get to a point where someone's going to be able to just like get something done within a day, or a week or whatever. But I mean, maybe, but like, it's just going to be so far, because we're just trailing the residential. We're trailing residential by like 10, 20 years. So I look at them and see where they're at. And, it's still not where I think it can be relative to all the other conveniences we have in our world, where packages are just coming in.
They also deal with more regulation because they're consumer based instead of business.
True.
Which
I think that
if the rules go in, we could have the same issue.
Regulation.
I'm sorry.
I think we got it easy on our side, to be honest, guys. Let's not start complaining about. Have you sit down and take a mortgage lender out to lunch, and then they'll tell you about all the regulatory. Banks talk about it all the time. Not all of them have mortgage departments, and they all shut them post 2008 Dodd-Frank because of those regulatory requirements. What is scary, Darren, is, and hopefully this is now a reversal. We were SBA and small business lending in banks was headed towards that consumer type lending, right? The 1171, I believe, where we had to collect about 27 bits of data points now for each SBA loan that we provide and report that, so they can do, analysis on what type of lending, if we're not being fair and if we're not being expansive. That's burdensome, right? Especially for the smaller institutions and the smaller lenders. They are, if history is any indication of what's going to happen, they're going to do what they did for resi loans. They're going to drop them off, and it's going to go to the money center banks, right? Or the specialist. But everyone else, it's gone. So maybe that could be, maybe we avoided that fate with this Doge movement. So maybe, let's celebrate the good stuff.
That's true. Remember the other day we were talking about the top 10 lenders here and how there is sort of consolidation happening in the 7A space at the top. And that's like essentially what happened with the residential business. And we're kind of moving in that direction. Can I just ask you, it's a slightly off topic, but it's been on my mind the last 24 hours. Potential scam alert here. When's the last time anybody's filed a claim on a title policy?
Actually, I have. I mean, it's been years ago. There was fraud involved, but we did.
How many years?
Let's see, 2000 and probably 16 or 17.
Yeah, okay. You just jinx yourself, Ray. You're gonna get one tomorrow. Watch.
So
yeah,
I think it's a scam, and we should get rid of it.
Man, I cannot wait to see all.
I would agree with you on that, and I think the price is insane on those things. It is just a money machine for those who write title.
We need to put them all deeds, all titles on a blockchain, make it government, and then boom, we're done.
Well, that's what I'm saying. Like, I'm guessing whenever title insurance was invented, I'm just guessing there was a physical place where you stored.
No, people would have run up into the book and then claim ownership, and then boom, they would sell the house.
So if everything's if everything's in an electronic database, then how do you even?
You're making a big assumption. You just said you assumed everything is in an.
Eventually, it will be, and at that point, can we then get rid of it?
I didn't. Did you guys get the notice? When's the notice where everything's on an electronic database? Did you get that one, Brooke? I didn't get that one.
They're gonna do that one right after they do the retirement paperwork underground.
Yeah.
Well, guys, I think we can probably leave it there. That was fun. Thank you for joining me on this riveting discussion about Doge. It's fun to say. So I guess we'll end it there. Until next time, ta-ta. All right, that's it for this week's episode. If you want more SBA content, you can sign up for our monthly newsletter and check out our sister shows, SBA Today and The BDO Show. We'll leave a link in the show notes. And don't forget to subscribe to this podcast so you never miss an episode of The Art of SBA Lending. Ta-ta.